I took this trade with only one of the 3 strong order block strategies that I will be teaching you in this video. Many traders confuse order blocks with supply and demand zones. The difference is that a good supply and demand zone can give you a good spot to get a good market price movement from, but a great order blocks will show you exactly where the market will return to. A lot of traders will confuse you with plenty abbreviations and concepts, but all these abbreviations will amount to nothing if you don't know what they really mean in the market. The names change all the time, but what really matters is the price behavior, character and identity. All candles are not equal in trading. They are candles that carry power in the market. A little candlestick combination can cause a lot of imbalances and strong drawdown on the chart. Each candlestick combination represents something relevant. A lot of traders try to teach on how a single candle can become an order block. Some even make up a lot of confusions by representing every candle as an order block. This makes traders confused and don't even know which one they will use, since there are lots of candles representing order blocks. There are many candlesticks flowing in the market trend daily. If you don't know how to identify the right order blocks, you may end up thinking every candle is an order block. The truth is that in order block, or should I say in an advanced order block strategy, which you are about to discover and learn completely, a single candle on its own cannot be an order block. There must be series of requirements and partnership with other candlesticks to make it a full order block. But before we get into this strategy, let me first, for the sake of clarity on the normal order blocks, give you some normal order block terminologies and their meaning. And as we get deep into the video, we will leave them behind and focus on the reality of trading. Here are some popular order blocks terminologies and their meaning. 1. BOS, it means break of structure. 2. POI, it means point of interest. 3. OB, it means order block. 4. IMB, it means imbalance. 5. LQ, it means liquidity. 6. CHOCH, it means change of character. There are many other order block terminologies meant to confuse you, but these are the very popular ones you should know. As you get loaded with knowledge and you begin to pay attention to details, you will begin to notice that the market does not just move in any direction on the chart. Casually, there are strategic reasons for each movement. Before we delve into the topics for today, I want you to note that there are many pro tips and information spread out in every part of this video, and each part of this video is a step into the next crucial information, so follow everything carefully so you don't get confused on the way. You're watching our video for the first time. Subscribe now to make yourself part of the tribe family. In this video you will learn 1. The reason for order blocks and smart money concepts. 2. The best order blocks time frame. 3. The 3 potential types of order blocks and how to trade each of them. 4. The 4 powerful mistakes you must avoid while trading order blocks. 1. The reason for order blocks and smart money concepts. Order blocks is an advancement of early trading strategies. In the beginning, all traders started trading with support and resistance, also known as the zones. But it came to a point when if support and resistance lines are extended too much, it begins to fail traders. The traders now advanced to trading the moment, called it the supply and demand strategy. They wait for a big market movement from a particular zone, then they draw a zone on it. And when the market hit that spot, they enter a trade. The win rate was great, but they began to encounter some challenges. The market sometimes will not touch the supply and demand zone, but it will make big impacts, which they will not be part of, and many times it touches the supply and demand zone, take out their stop loss, and begins to move in the former trend direction. Those who were not deeply rooted in supply and demand began to get confused with doubt, FOMO, and fear for massive loss when the market hits their stop loss, and the only way to increase the win rate was to use order blocks. Order blocks shows you where exactly the market will return to. It is not confusing to identify if well understood. Order blocks reveals the real price intentions at a particular zone on the chart. An order block is not a one candle movement. It's a combination of two or more candlestick patterns. The best order block time frame. Order blocks can be found on all time frames, even down to the 1 minute time frame. A lot of traders multi-trade different time frames together, but here is a pro word of advice for you. An order blocks is a one-time move, and once it's traded, trades should not be expected or taken from that particular spot anymore. After trading an order block, you must wait for a new and fresh order block to trade. Having that in mind, you must also focus only on one time frame. When trading these order block strategies that I am about to reveal to you, it takes time and patience to master one time frame. But once you have mastered it, you take control of the time frame. You will understand every hook and cranny of order blocks on that time frame, just like the way you know yourself. If you are a swing trader, you should use the 4-hour time frame to make your order blocks analysis. A more patient trader can use the 1-hour time frame to expect order blocks movement. But if you are a day trader, you should only use the 15 minutes time frame to make your analysis. Don't go below the 15 minutes time frame so you can get quality trades even as a day trader. Some day traders combine these 3 time frames together, but that will only lead to confusion and stress you should not be worrying about. What is happening on 3 different time frames together at the same time? When you focus more on one time frame, the easier it gets, the less you trade, and the more you win. Now, let's delve into these order block strategies. The 3 potential types of order block strategies, and how to trade each of them. 1. The imbalanced strategy, the large candles. Pro tip: the main proof of a potential order block is the impact it made on the market from the point of interest. The imbalanced type of order blocks is formed as a result of a very strong movement in the market price at a particular area on the chart. This type of order block is rare to see on the chart, but when it appears, it does wonders. It has 2 solid candlestick patterns, a base, which will appear as a doji or an inverse pin bar candle, and a large big candlestick. These combination indicates 2 things. The base candle represents the order block zone, while the big large candlestick represents the strength of the buyers or sellers at that particular zone. The order block at that zone is so strong that it pushed the market very strong and caused a large big candle to appear, signaling a potential strong area for the market to respect when it returns to that zone. Let me show an example of this zone on the chart. Take a look at the doji order block at the top, followed by a big bearish large candle. Note that this order block only appear at the base of a price movement, not even close by, not even at the half movement of the price move. Everything must be happening at the base. After sighting this order block, the next thing you do is to begin to observe the strength of the order block. The strength of an order block depends on the impact it had on price from its zone. A great impact is determined by the bigger price movement from the order block, bigger than the rest of the former moves. As you can see here, the price movement from this order block is greater than the former price movement, and that validates the order block. Now we have to wait for the price to return to the order block zone, which we have drawn already. There are two ways to take a trade when the price returns to this order block zone. The first way is you place a sell limit at the low of the order block and place your stop loss at a few pips above the order block. These will help you enter the trade early and manage your risk. The second way is by waiting for the first bearish candle to appear after price has touched the order block. Then place your stop loss above the order block. This will help you to avoid stop hunts. Your take profit level should be at the next significant low. Do the reverse of all this for a buy trade. Now let's see the result of this trade. The trade went well, and the take profit level was hitted successfully. Now, let me show you one more example on imbalances. You can see the doji order block candle, followed by a big bearish candle. If you look well into it, you can see that they are all happening at the base of the price movement. Now let's see the impact the order block can leave on the price, as that will determine if it's a valid order block or not. The order block had a great impact on the price. See how the price fell from the point of the order block, and if you look at the former price movements before the order block, no one fell harder than the one order block impacted. This is the signal that validated the order block and will make us expect the return of price movement to the order block zone. Now, you wait for price to return to the order block zone. Now, the price has returned to the order block zone. The bearish candle fulfilled two things. First, it triggered a sell limit, and secondly, it became a bearish candlestick. After triggering the sell limit, now traders can enter the trade as the second entry option, just as I told you earlier. After all this have been fulfilled according to our strategy, let's see how the trade will go. We place our stop loss a few pips above the order block and our take profit level at the next significant low. Pro tip: another reason why we wait for a good price impact on the zone before considering an order block is because it also becomes our take profit level. Let's see the results of the trade. It was a big success, and this is how it will always be if you follow all the rules properly. Order blocks 2. The base order blocks. The base order block is one of the strongest order blocks. The names change every time, but what matters is the character, combined with the mysteries that I am about to show you right now. You will begin to see these order blocks on your chart, and you will be able to identify them clearly when you see them. The base order blocks come in 3 different patterns. 1. The trapped candlestick order block. Before we continue, meet VMONEY Swift's exchange. They buy virtual currencies like SKRILL, NETELLER and Perfect Money. They help to exchange them to USDT or Naira. They are a trusted exchange. You can send them a message on WhatsApp with the number on your screen to exchange with them today. Welcome back to the video. The trapped candlestick order block is represented by a candlestick inside a target trend candlestick in an uptrend. You'll find this order block as a bearish candle in between 2 bullish candlesticks in a downtrend. You will see this order block as a bullish candlestick in between 2 bearish candlesticks. This order block must be spotted at the very base of the price movement and must have 2 or more target candlesticks flowing in the target direction after the order block. For this type of order block, we must wait for a break of structure Then we watch out for the impact of the order block and see if it can force a big move. On the market, see that the market broke a structure, then retraced to the order block zone. When it gets to the zone, we will have to wait for a target momentum candle to appear, and as you can see on the chart, a bullish momentum candle has appeared, and that has given a signal to trade. After the momentum candle has been confirmed, then it's time to trade. Our stop loss will be placed a few pips below the entry spot, and take profit target will be placed at the next significant high. Check out the outcome of the trade. The take profit target was hit successfully. Your win rate will be high if you follow the rules of this strategy. Now, let's take another example. First, the order block is discovered and waiting to be validated. You can see the impact the order block is making on the chart. Let's see what happens when price returns to the order block. A momentum bearish candle just appeared, signaling to take the trade. Now let's make our risk management plan. Place stop loss a few pips above the entry and take profit target at the next significant low. Is this trade going to hit our take profit target? Our take profit target was hitted. The second base order block is called the Wiki Imbalances. The Wiki Imbalances forms as a result of many trading indecision at the base of a price move. You will see two or more Wiki movements in a rectangular position at the base of the price movement. They are very good order blocks because they represent strong liquidity and imbalances at that point in the market. Draw out the order block from the rectangular move of the market and wait for price to return to that base order block after breaking the structure of the last trend move. Now the market has returned to the order block zone and printed a bearish momentum candle. A good sign to take the trade. Just like the first order block, you should place your stop loss a few pips above the entry and your take profit level at the next significant low. See how the trade went, take profit levels matched. Let's see another Wiki candle imbalances example. A Wiki imbalance order block has been spotted at the base of a price movement. Market structure has been broken. Now let's wait for the return of the price to the order block. You know how we do it. Not yet. Our signal candle has appeared. Now it's time to plan this trade. Our stop loss is placed a few pips below the entry, and our take profit target is placed at the next significant high. Now let's take the trade. The trade was successful and our take profit target hit it. The third base order block is the little incomplete trend move at the base of a price movement. This activity happens like the market was making a tiny trending market at the base of the price move, then all of a sudden stops trending, then followed by an aggressive price movement, still in that trend direction, but the high and low movement has stopped already. We take advantage of that little trend price movement to identify the liquidity spot, and we draw out our order block zone at the beginning and end of that little trend movements. This becomes a potential order block zone, where the market is sure to return to after making a big impact on the price and breaking the next structure. For this type of order block, most times, the market reacts very quickly from the order block zone. Because of this knowledge, you place your buy limit at the half of the order block structure, then wait for price to take the orders. At this point, the market has taken the buy limit orders and you are now in position. So what do you do next? Now, you place your stop loss, a few pips, at the low of the price entry, then you place your take profit target at the next significant high. That being done, let's see the outcome of the trade. Take profit levels matched. Now, let's delve into the last and final order block strategy. The zone flip order blocks. This is the third potential order block pattern. This order block is seen at the support and resistance zone. It works as a zone flipper, meaning it appears and flips a support zone to a resistance zone, and when it appears at a resistance zone, it flips it to a support zone. It appears as a trapped order block candle, exactly at the support or resistance zone. It must appear outside the zone, or the next candle after the trapped order block must break out of the support or resistance zone. This proves that the market was moving on from that point of the order block, and a good flip of the zone will occur. After this move has been confirmed, we watch out for the impact of the order block on the market. Watching out for the impact of an order block is very crucial, because it is what makes it different from the other former trend movements, and it clarifies the fact that the market will move higher or lower when it hits the order block zone, increasing high probability trades. After a good market impact has been discovered for this order block zone, you will have to place a buy limit at the top of your order block. Then you wait for price to return to the zone order block and pick the orders from there, and then go on your target direction. At this point you are already in position. Here is how to run your risk management. Now, place your stop loss at the low of the order block and your take profit target at the next significant high. Now, we're good to trade. Let the market unveil what it has for us. A very easy profit secured, just by spotting the zone out order block. You are going to see this order block more often on your chart, and if you follow the instructions, you will make massive profits from it. The 4 powerful mistakes you must avoid while trading order blocks. These are the costly mistakes that you should never make while trading these order blocks. 1. Never do a top-down analysis for order blocks. Since order blocks are only used once, always trade one time frame while using these order blocks, so you can focus and master the time frame. This also assures you more wins as you gain mastery on that time frame. Some traders always trade many time frames. The more you trade more time frames, the more you get confused. The more you have to worry about understanding all the time frames, and the less productive you become. Wondering why many traders give up? The reason is that when they find a profitable strategy, they want to take all the trades in the market. They want to be part of all the big moves the market will make. They keep wanting all these. But at the end of the day, they get none of it. There is a thing called the cycle of doom. A lot of traders are trapped in that cycle. They get so excited when they find a new strategy. Then they begin to use them at the fresh start. They will become very profitable, but as time goes on, they become overconfident and start trading outside the rules of their strategy because they want more market moves. After a short while, they start losing money again. Then they begin to blame the strategy instead of themselves. Focus on one time frame for order blocks, and you will save yourself the stress of wanting everything the market has to give. This will help you escape the rat race. 2. Don't trade order blocks that produces small impacts or same movement like the former trend movement. These order blocks are very less productive and should be ignored. 3. Some traders take almost every candle as an order block. Don't be like them, so you actually know what you are looking for in the market. Use these order block types that I dropped in this video. An order block is a cluster of 2 or more candles. They operate in different ways and have different rules based on their character. If you want to profit in the world of trading, you should keep your eyes focused on what brings about the big moves in the market, because only them will give you the big profits. If you want to escape the rat race, keep your eyes on the big moves. And order blocks bring about those big moves. I know a trader who made $500 on his first day trading the Wiki Inbalance's order block. For 6 years, a trader had been using only order blocks to trade, and he has been very profitable. Framing your mind to learn and practice and backtest before you trade order blocks will not only make you profitable, but you will start trading like it's a regular job, where you know what to do and what to expect each time you do something. 4. Don't overtrade. Overtrading naturally comes when you run out of patience and can't wait for trades anymore. So you begin to trade anything you see on the chart. It may look like a wise move at first, but at the end, it causes a drastic loss for your trading account. I can't emphasize this enough. If each time you take a trade it gives you a good amount of profits, then that trade should be worth waiting for. Don't take everything you see on the chart, or you will get nothing out of the chart. If you trade Forex currency pairs, before making an entry, always watch out for the news. If it's a time for economic news, allow the news time slide before thinking of making an entry. Why? Because the news comes with very high volatility, which can disrupt your entry. Trading order blocks is a very effective trading strategy, and updating your strategy with everything you learnt in this video will not only boost your profits, but it will help you to trade with confidence. By following all the rules, strategy and psychology, you have received in this video. In a very short time you will begin to notice how profitable you will become as you follow them and practice them more. It will make you millions in the best time to come. Subscribe to this channel now so you don't miss out on future strategies. If you need a Forex mentor that will personally guide and mentor you one-on-one, check the description box below for a link into his Telegram channel. See you in our next video.